Welcome to day 2 of TOKEN2049. 10,000 plus people and all the energy in the world, I think, are right here in Singapore. Last year, about a year ago, almost exactly, Luuk and I were on stage talking about the exchange market. This is, of course, September of 2022. Some of you might have heard that about a month and a half after our panel, the exchange world was rocked with essentially the, well, unbundling of FTX and everything since then. It's been a very challenging year, maybe even year and a half since the Terra Luna dive. But the most important organizations in this space remain, as I said last year, but remain the exchanges. This is where the trading activity occurs. It is the heartbeat of our industry. And here on stage are 4 C-suite officers, CEOs principally, of some of the biggest exchanges in the world. So I'm going to let each of them introduce themselves, starting with Federico.
Hey, I'm Federico. I'm the CEO at Phemex. We are an exchange focused on futures and spot trading in the process of decentralizing. We're based between Asia and Milano. Thank you.
Edward?
Hey everyone, this is Edward. I'm the General Manager for Asset and Commercial Business Unit within the Huobi Group. I think everybody knows us. I know we just changed to the new name. I think
we'll talk about that.
Yeah, we'll talk about that later. Thanks to media, everyone.
Luuk?
My name is Luuk Strijers. I'm Dutch. I'm the Chief Commercial Officer for Deribit. I used to be Panama-based for the last few years, but I just moved 2 weeks ago to Dubai, where the new HQ is going to be when we get licensed under VARA, the new regulator there.
Stephan.
Hi, Stephan, CEO of BitMEX, one of the oldest derivatives exchanges in the crypto space out there.
That's for sure. And I'm David Wachsman, CEO of Wachsman, the largest communication and strategy organization in the industry. So let's start by talking about the state of the market today. Actually, Stephan, I want to start with you. What do you think the market sentiment is? It looks like, on the spot side anyway, things are mostly flat.
Totally. If you look at the market, so general sentiment for me is really wait and see, right? So a lot of things are upcoming. We heard about FTX sale of assets, right? Mt. Gox will come to market. Bitcoin halving next year. ETFs still not being approved in the US. So stuff will happen, no one knows when. This means that people who want to get into crypto newly, wait and see. And I guess this is why we see, especially on the spot market side, not so much activity. Because the first thing somebody does who's interested in crypto, he starts with spot trading, right? First education, then spot trading. Later on, derivatives trading. So for us, for example, as a purely focused exchange on derivatives, and we always say we're here for traders, not for investors, right? So they make money in any market situation, and that's why they're still here. That's why we see at least decent volumes in the derivative space. I mean, everyone loves to have it higher or better or more. It's not 2021 again, or not anymore, but at least everyone can get by.
Yeah, 2021 was, of course, a unique year in a lot of ways, right? We saw venture at an all-time high. We saw very low interest rates, and equities boomed. So it didn't kind of matter what industry you're in.
Yeah.
And crypto certainly succeeded. Federico, at Phemex, you guys are working in both principally institutional, but also on the retail side. Is that correct?
Yes.
Okay. So can you give us a breakdown of the difference in sentiment between those two different markets?
Right. I would say that, for example, institutions have 2 different types of players. Some are the crypto natives, which are used to any sort of crypto winter, and then some that came from TradFi, and I think those have, a lot of them have left the market or took a break for regulatory reason, because the market isn't profitable anymore, all these kind of reasons. Retail as well can be divided in these 2 categories. So some retail, I would consider them crypto native, since they've been trading since 2017. Some people started from BitMEX, for example. And those, I think, are still sticking around. Their capital, if you're considering the price of Bitcoin, is still there, unless they got blown up. Some of the retails, they joined very late to the party in 2021. So I think those are not doing so well right now, especially because the narratives in 2021 were not, I would say, very friendly to retail, and this market has been brutal for retail traders, new traders that joined kind of late. So I do think that there is still a strong core of traders in the market, but I don't see many new people coming in at the moment, even though there are some narratives. So basically you think
a lot of people may have joined during the 21 boom, let's call it, and as a result they bought in, these are retail spot traders, for example, at too high a price, and so for them, and all their friends, sentiment is down. Would that be an accurate statement?
Yeah, they don't even want to hear about crypto. Like, they don't want to, like, they don't even think it still exists, some of them.
This
They
is a
think it's
sobering
done.
thing to hear, and a little bit disappointing, I've got to say,
Oh,
but it sounds like we've got a lot of ground to cover. But worth noting, at Deribit, your volumes are up this year, is that correct?
Depends how you measure. The volumes are somewhat flattish, but measured in contracts, they're growing. So we look at volumes two ways: either how many options do we trade, or what's the notional value of one option. So if Bitcoin trades at 25,000, one option equals 25,000 notional. If it trades at 60,000, it's the same option is
60.
double the price. So we're growing in number of contracts. So if you look at, let's say, our peak in 21, we had open interest of around 20 billion. We reached the same open interest last March. So banking uncertainty generated...
March of 22 or this March?
This March.
Okay, yep.
So, and the same peak measured in dollars, so notional value, but at half the price. So we grew...
Double contracts.
Yeah.
Okay.
So if you look at the last months, we keep on growing. So despite the market downtrend, the relative contribution of options to derivatives overall keeps on growing. So if you add all the exchanges out there and all the derivatives, volumes, futures, perps, options together, we had like overall 2 years ago like 1% market share, and that's growing to like 3%. So in a low vol market, so people call it the bear market, but it's not really bear, it's more low volatility.
Sorry, can you repeat that?
In a low volatility market, so we
Yes.
look at the
Relatively flat.
No, it's volatility wise, it's like rock bottom. So
Yes.
options are priced using volatility. So
Yes.
the premium gets higher if implied volatility is higher. We're looking at rock bottom levels. So people simply, and that's what everyone sees here, don't see trading opportunities. But there's lots of people out there looking for yield. And in the absence of opportunities, in a higher interest environment, you either put your money in the bank, or alternatively, you trade options. So you sell out of the money options, for example, and you generate yield. So despite the lack of trading opportunities, the options remain interesting.
So traders are still there on the institutional side, right? Is what we're seeing. The
Retail
big
as
money
well.
traders. Retail as well. What percentage? Let me ask you this: what percentage of your trading activity on the derivative side are from retail versus institutional? More or less.
I come to that in a minute because we delineate differently.
Okay.
We don't say retail or corporate or retail and institutional. We say professional and non-professional because for us...
And unprofessional?
Yeah, unprofessional, we don't...
Yeah.
I mean, it's not that we don't want to have them, but it's quite difficult for them to survive, right? I mean, and coming to Luke's point, people at our exchange as well, they're even going in for basically no volatility trades, going in for funding, right? Creating the yield there. But you need to know how the exchange works, you need to know how the contract works, and you need to basically monitor your position on a real-time basis.
These are sophisticated products.
Exactly, very sophisticated, and we look for those sophisticated traders. I mean, coming up, basically, you could say we are roughly 60% institutional and 40% professional natural persons, right?
Yes.
So more like accredited investors. They're all people who use the platform multiple times a day.
Worth noting for the audience here, all 4 of these exchanges represented on stage do not trade in the United States. So everything we're talking about are global, but not US-based. At Huobi, now HTX, is it correct?
Yeah, HTX, yeah.
Brand new, guys. Look at his T-shirt. It says Huobi on it.
Sorry, I haven't given time to change to the new version.
Well, you guys have a mix of different products. Can you give us a quick rundown of the different products and the different demographics you target with those products?
All right, yeah, I mean, everybody knows, right, we used to be the top 3 globally. We are one of the biggest comprehensive service provider for all the trading markets we have. We have spot, we have derivatives. I mean, we are small for option, but we provide as well. And also, we also have the OTC market as well. We used to be the biggest one in China. So currently, we're still targeting on this position. There's no change. But for our strategy, a little bit balance. Because we are builder, project owner, and comprehensive clients friendly market. So we put a lot of attentions and efforts into the spot market, just as Federico just mentioned, right? So Because currently the market's not very, very warming or very popular right now. So we still think we need to put a lot of efforts to support new projects. Only the new projects, good projects, they can bring new users.
Okay, so this is an important point, and I want to go back to this because I want to talk about new products. This is going to be one of the topics of discussion here, but also new users, how we get them in.
Yeah.
Since it does seem to be something we're looking for. Federico, we talked about the possibility of demographics being simply different. Look, we're here in Asia. We see 10,000 plus people, and as I said earlier, all the energy of the world here in Asia. Are you seeing at your exchange that maybe in different geographies, we're seeing different levels of interest?
Yeah, for sure. I think naturally some demographics tend to be more interested in trading. Some countries, for example, Germany or Asian people tend to love trading. I do think also that crypto is generating some sort of global digital identities. For example, people interacting with crypto Twitter are not necessarily all Americans or from the UK. Most of them are global, like they live around the world, but present like a digital identity that is international. So I think most of our users, they come through these distribution channels of like global
through
speaking.
crypto Twitter.
Crypto Twitter, YouTube, like these are the channels where a lot of people get onboarded on. And I think maybe some people underestimate how much retail take a look at social media to interact with crypto. So I think for an exchange it's important to take a look at this channel because they are the ones delivering you the volume. And also like to make sure that the right kind of education content and like the kind of correct information is distributed in this channel. So you want to make sure to work with people that have a good reputation, that have respectable like approaches to trading and all that. And that's what we try to do when we interact with these kind of partners.
Edward, would you agree? That is to say, do you think that education, I should say, is the very first thing you need to do to go and get more retail traders on board?
It's very important, but from our perspective, because for all majority of derivative exchanges, they focus on more professional traders, right? So you have to have kind of knowledge, otherwise you cannot enter into the market. For us, our strategy is to bring the new user from the spot side first. So for that part, education is important, but you can make it simple. You can use wallets. You can use a lot of new assets like payment. You can use a lot of RWA assets to bring them in, and then you start to trade them up. We also provide a education program, but we usually co-work with a third party. We don't do the things by ourselves. And I agree with Federico. I mean, you need to have KOLs or opinion leaders to train them, to tell them how to trade more complicated product like derivative options, contract, all these things. But we can start from sport. So that's our strategy.
You mentioned new projects in addition to new products being a strategy for Huobi.
A new project, because everybody exchange is the platform business. You cover supply side, you cover demanding side. Supply side is definitely the top level assets. Look at Binance, or even us. We are very, very serious about new projects, right? New tokens, right? These new tokens have very important value add into the industry, bring new users, optimize the technology. These things are very important. Only by this kind of new projects to how do you say, attract the new users, you can make the industry more healthy. Yeah.
But Stephan, you, at your organization, at BitMEX, it seems to be a doubling down or tripling down on a core product that you became famous for in the first place. What was the strategic reasoning behind that?
Well, actually, the realization that regardless of the market situation, a company like ours will succeed if we do three things. Provide a fitting to superior technological functionality for derivatives trading, which is like what are the contracts, but capital efficiency as well. So we went, for example, earlier this year to a 10-minute settlement and funding cycle so that you can basically realize your P&L every 10 minutes and even withdraw it then, right? So just as an example, latency is an issue, safety, security is an issue, right? So this is a base layer. Second one is you need to provide user experience. Yes, you have different
for API traders and for...
Well, for all. I mean, the API traders look for latency and for ease of connecting, right, and good documentation so that they can build up their stuff. Our professional traders in the space look for our web front end, which basically should enable them to trade eye to eye with institutional players, which it does, right? And then it's about smoothing the user experience. For example, our customer support is one of the best out there. Our average rate, or let's say, reply rate, right, and solving rate is like 1 hour. And it's personal customer support, right? I mean, people really get a customer support agent. We try to white glove our top traders. And the third one actually is fun. I mean, in the end, even the professional derivatives traders, they look for kind of fun. And this is where we double down. Just recently, a couple of weeks ago, we launched our guilds feature, which basically is a little bit of fun aspect, but it gives, for example, individual traders the ability to join forces and act like a trading desk in a larger organization. And they even get the benefits of having better fee tiers, getting maker rebates, right? Because they can accumulate and consolidate their volumes. They can interact with each other without sitting in one place, so it's really the experience stuff. And then, I mean, yesterday we announced that we go for some prediction markets, which in the first place is frankly adding to the fun part. It's meant as, yeah, there is a serious aspect to it, but it's a little bit of fun, just to add, when you trade seriously, a little bit of fun in the side of it. And technologically, it will enable us to later this year go into more structured products.
Very interesting. I think we should watch that space very closely. At Deribit, of course, you started as and have had tremendous volumes on the derivative side, but you're expanding, I'm going to call it your palette here. What's the concept and what's your strategy?
I think we are like the old one out here. So we are like 85, perhaps 90% institutional and 10% retail. So the 10% we have is not average retail, it's more, let's say, the very high sophisticated ones, because if you log into our screen, you see the options chain, you see the Greeks, and people are overwhelmed. So there's only like a subset of all these people. That's why you don't see us on race cars, etc., because it's pointless. We target like a niche segment.
So we're not going to see Deribit on race cars anytime soon?
No, never.
Okay.
No, never. But so our target is institutions. So what do institutions need? So after our last panel, it's safety, it's security. So we're, as I mentioned, we're moving to Dubai. So we're getting licensed, so fully licensed. We're getting ISO certified. So this October we'll get ISO certified. SOC 2, audited financials, that kind of stuff. Then on the institutional, like let's say features, we have 3 external custodians at the moment. So off-exchange settlement, Copper, Kobo, and we're beta testing with Fireblocks to go live soon. And we're in talks with 2 or 3 others as well. So we offer custody of choice. So big institutions. So our clients are essentially all the big firms you see on the street trading on Deribit. And what they want, and especially if they manage external money, is they want to keep this money to make sure that there's no
Okay, but you said you're also going to be expanding the product set. Is that correct?
So it depends on what you call the product set. So we're launching linear options. So linear options like options on Solana, XRP. So that's like a product feature or product expansion. We're launching cross-collateral, which is like more like a feature and not really a product. We're launching mass quotes in order to enable market makers to quote faster, reduce latencies, increase performance. All that stuff we're expanding. So we're expanding on like 10 different levels. But the core focus is getting more institutions in to enable our growth, which benefits, let's say, the 10-15% retail, because all the features we bring, they are like semi-pros. They like the same stuff because they might be employed by one of them. So those are the people that trade on Deribit.
At Phemex, how are you preparing for what might be the next bull run? Of course, in April of next year, we have the halving, at least that's when it's anticipated. And typically, about 6 months after that, we see some sort of price or at least volume activity. Right. What are you doing at your firm?
Right. We are in the process of strengthening our community and basically empowering people to build their digital identity within our exchange, so through a soulbound token. So we are creating some sort of new approach for traders to feel like they are at home within the exchange. We're lining up to give up to 1,000 BTC to the holders of these tokens to encourage them to basically take part into the creation of this digital identity. And we want to create like a community where people can like have fun trading in a social way, similarly to what BitMEX did with the troll box, or what some Discord channels do with like the challenges and all that. We think that trading is naturally some sort of social activity in the sense that people love talking about it, comparing, competing. So for us, we're trying to foster this competition, this healthy competition as much as possible, and keep people engaged with new products, new listings, everything that's current people talk about. We want to have it on the exchange, so that when the bull run comes, the users are already there and the volume is going to come as a consequence.
Historically, there's always been frenetic activity on trading floors. This is true at equities, derivatives, anywhere. My brother, formerly working on the New York Stock Exchange floor, will tell you exactly that. But Edward, what types of new products do you think your users are going to be most interested in? And when I say not just products, but what about differentiators? I hear customer support, and I've got to tell you, that means a lot to me, having had to deal with this before. What's Huobi doing to make sure, or HTX, to make sure that your customers are satisfied?
Yeah, I mean, before that, I need to explain the meaning of the HTX. Actually, we have three meaning behind. Number one is, you guys know we do the biggest M&A case last year for ourselves. So the Tron group, have the merge our exchange. So currently it's a big group. So we have the layer one protocols. We have stablecoin business. We also have the exchanges. Actually, we have two. We have Huobi. I also have the Poloniex. So the HTX means the Huobi plus Tron plus exchange. That's number one. Number two, we have the platform token called HT. So it's a HT exchange, which everybody's clear about our platform token. And number three is for, just as Stephan just mentioned, we like dinosaur. We both are, I think, a dinosaur. So we operate the exchange for over 10 years. Actually, it's the 10-year anniversary yesterday for us. So it's a 10x exchange. So there's a three meaning behind. So I think it's a very meaningful rebranding. And also it's better for everybody to easily to pronounce us, because for Huobi used to be a very Chinese pinyin pronunciation, right? So it's easy for Chinese guy, but not easy for foreigners. Sure. But now it's everything is more international. But we still keep the Chinese character Huobi for Chinese users if they like. Okay, that's number one. Number two, for us, our positioning a little bit different from BitMEX and Deribit and maybe Phemex. I think everyone has very unique position and a very clear strategy. BitMEX focus on derivative and the professional traders. Deribit focus on the institution, professional trader options. Phemex focus on community, KOL, channel driven. For us, we position ourselves as a comprehensive platform, easy for zero knowledge user to enter the market. Because at the end of the day, you need to have someone to become the bridge between the Web 2 user to Web 3. That's our responsibility. So that's why we provide a very comprehensive market, easy for everyone to deposit money.
So what are the challenges that you face in trying to become is it boiling in the ocean? What's the challenge, I should say, in serving all these different groups at the same time?
I mean, the challenge is definitely how to balance the internal resource, because exchange operations always a very comprehensive, very complicated job. I mean, it's profitable, but it's a very complicated job. You have to have very strong R&D team. You have to have very strong wallet team, risk control team, security team. Like us, we have zero hiking cases in the past 10 years. It's difficult. It's really make you very, very hard working. You have very solid team, 24 hours to cover it, but I mean, it's very complicated. So you have to balance all these resources to cover different business lines. So sometimes, to be frank, we are not strong in everywhere, but we are very top level for majority of the products we provide. But for us, as our positioning, we try to serve all the mass adopter, mass retail users. So we have to provide as easy as possible for all these retail users and zero knowledge traders who may have interest to enter the crypto space, but they haven't traded yet before. Yeah. So that's why we provide these, product metrics. Sport, derivative, fair channels, O2, so P2P, peer-to-peer market. Yeah.
Some challenging endeavors you have over there at Huobi/HTX. I actually want to double down on one thing you said in particular. Yeah. These are sophisticated organizations. So Stephan, you're the CEO of BitMEX. It means you're responsible for a heck of a lot, all these different teams, security, customer support. What would you say is the type of thing that maybe the audience doesn't know, that under the hood working at an exchange or leading an exchange is a great challenge?
It is the reliability, because your platform needs to work, you said it, like 24/7. It's real-time 24/7. You need to have very mundane things like pager duties organized, right? People need to stay alert all the day. If there is an incident, you need to react basically immediately, because otherwise you will lose the trust of the customers, right, on the traders, and they want to know what's going on. You need to communicate. So I'd say it's basically this 20. I mean, it's the best fun of it, but it's a 24/7 cycle, right? No holidays, no nothing, right? I mean, you never close down your platform for maintenance, sometimes for an hour or so, but even that is already something difficult.
People get probably frustrated. Federico, exactly. Do you sleep?
I try, yeah, sometimes. I think crypto is like, the market is 24/7, so every morning you have to catch up with something. When we started off in 2019, every morning there is a crisis or something you have to fix, something fast to get rid of. But once the organization grows a little bit, it's more stable. You can trust the people to delegate. We have people all around the world, so we cover every time zone. So there's always someone available to check if anything is happening. So I think like all of these exchanges have basically the same setup in which you are covered 24/7, customer support in person, responding to inquiries. Now the load for customer support is a bit lower with the market being like this. So I think the users are getting a very good experience trading at the moment. And exchanges are much better liquidity. The listings are faster. I think the competition between exchanges have been very positive in that regard, in which we pushed each other to really have comprehensive and efficient products.
Yes, and I would say it's quite sophisticated products too. Luuk, maybe you could give us a quick rundown on kind of how things have progressed over time. I know I'm asking kind of a more challenging question, but from the time you found it until today, to what extent has the product set and the platform improved?
We were founded in 16, or first trade in 16, so we started out in 14. What changed? I think when I joined, I wasn't there from day one. I joined in 19. We were 20 people, and we had a decent market share and activity already. But we were 20 people. So did you sleep? It was a different day and age, because then stuff happened. The platforms, none of us were like perfect. So platform outages, etc., occurred more frequently, and problems we weren't able to solve like that. So over time, everything changed. So we have people like internal audit, enterprise risk, all that stuff we didn't have back then. So now it's policies. We have 50 policies we have to adhere to. If you're changing something in production, it has to be signed off by multiple people. It has to be tested according to all these plans. In 19, if we had a fix for something, we released it ASAP. And sometimes that solved the problem, we created another one.
Right.
And that kind of stuff is no longer happening. So we live in a much more contained area right now. Is that better? On the one hand, yes, it's better, but it reduces flexibility. But I think in order to grow, in order to get like the billions of dollars of potential asset managers, trading firms, structured product providers, they want this kind of stuff. So for us, as mentioned before, we focus on the institutional side. All of this has to be done to increase quality, to increase governance, to increase all of that stuff. So it's an ongoing trend. And I think in a few years from now, and there won't be a list of 100 exchanges. There will be less exchanges. Each one have their own focus, but there won't be 100 unregulated, zero KYC. It's not going to happen. The regulators are going to step in, and all of us that will be there 5 years from now have to adhere to some of these. We're not saying that all of us will become another copy of Coinbase, but we will need to get stuff organized, and that's what we're focusing on.
Stephan?
Yeah, I'd like to jump into that because it resonates with our experience quite a lot. But this experience was even a determining factor in ourselves repivoting. I totally agree with you on the general level, but there are then differences, right? I mean, I wouldn't say I come from, but I have spent a lot of time in TradFi. What actually the difficulty is, if you're overwhelmed with policies that don't talk to each other, you create more harm than you create benefits, because it will slow you down. It will not harm you. That's not true. It increases, let's say, what all of this does is it reduces volatility of your performance, but it reduces the speed on which you can adapt. And we are basically, I mean, if you look at our name, BitMEX originally stand for Bitcoin Mercantile Exchange. We still are more on the Bitcoin native part, right? I mean, that you see even in our products. If you look at Tether margin contracts, we are not, I mean, our market share gone up like yours, but not as good. If you look at Bitcoin margin contracts in the derivative space, we're still number 2 in the space, right? And we are pretty much loved by this community. So not saying that you shouldn't get regulated. No, you should adhere to all the rules and regulations out there. But every exchange need to make sure that they don't make a paper exercise out of that. This is why we doubled down on derivatives, because we thought like, no, we are not in a position to build up an organization that consists of thousands of people catering for spot market, for OTC brokerage, for custody, for derivatives, for education, etc., because it requires a completely different organization, and we wanted to stay nimble and humble. So basically, we're a quite small organization nowadays with around 130 people globally.
But very efficient.
Yes.
Wow, and how big is the HTX group at this point?
For which part?
How many people at this point in HTX?
For HTX, we have around 900 people. We used to, maximum, we used to have 2,500 people before, but we do the M&A, we do the restructure. We also, to be frank, we do some layoff in the last quarter four and this quarter one to save the cost to conquer the winter season. So currently we have around 900 people. We think it's a nicer size for us. Yeah.
Yep.
Yeah.
I want to ask you one more thing, Edward. So as we kind of get closer to the end of this session, 2024 is around the corner.
Yeah.
As I mentioned, we have possibly the halving, possibly the ETF. Again, what is Huobi doing? What is HTX doing right now to prepare for next year?
Oh yeah, we are very focused right now. Well, our strategy, number one, we definitely focus on the APAC region. That's our strong market. That's number one. Number two, we still position ourselves as a very, very friendly, comprehensive market for all the zero knowledge users, no matter for traders or retail clients. Number two. Number three, our key strategy is to focus on the new projects, new assets. That's our main strategy, so as to continuously bring the user to us. For example, we take over the Phemex operation since March, and our DAU grow 5 times in the past 6 months. So just by this kind of strategy. So we focus on all the new and high quality projects, and then only by this we can create very strong liquidity, and then we can build these projects and level them up to the better products which BitMEX and the Deribit they are operating. I think that's the way how we co-work. So that's why I also manage the venture arm. We are one of the, I think, most friendly exchange for all the builders. Any early stage projects we support. No worry what's your background, how mature your product is. If you have a good idea, you have good responsibility, you want to help the industry growth, we support. We have incubation program, we have hundreds of millions, venture funding to support the projects. We invest around 10 to 15 projects already for the past 6 months. We're trying to invest more, and we list over 100 tokens just within this season. I mean, under the group level, but for Huobi, we pick up the top level quality of the projects, like the latest project, like maybe WorkCoin or maybe Unibots. We are one of the earliest exchange to discover them and to list it to let everybody can trade. So that's our positioning for 2024, and we are positive on that because currently it's bear market, so the liquidity is rather low. But if you go back, if you recover, as just Stephan mentioned, ETF, all these microeconomics condition better, then we think the liquidity will be strong better. And
hopefully.
Yes. Yeah.
Federico, I want to ask you kind of a year from today, if we're on this panel once again, what do you think are going to be the themes for exchanges in the latter half of 2024?
Right. We personally are in the process of decentralizing, so we are sharing our growth, revenue, governance via our token. So I think more exchanges will be hybrid between the two. I see more people are actually getting into crypto almost from instead of starting from Bitcoin or Ethereum, they start maybe from Friendtech or from Unibot or something. So I think the landscape of users will be much different, and I think exchanges will be even more flexible than they are now in capturing these new users. I think exchanges still will be at the forefront for onboarding users simply because the UX is the best one. But I think there will be more hybrid products in the market.
So Stephan, do you agree? Do you think this is going to be more of a hybrid DEX and centralized exchange world?
Yes, of course. I mean, and BitMEX, from our founding ethos, basically, is very much on a decentralized space. If you look at our founders, they're active in that space as well. We have no issue with decentralized exchanges whatsoever. I would even personally believe that they will grow faster than the centralized exchanges because they come from a lower level. And actually crypto, Web3, DLT technology is about decentralization. So if we wouldn't see growth in that, I would be rather concerned. right? But this brings new business opportunities for ourselves as well, because you go decentralized if you really know the protocol, if you want to participate in governance decisions, etc., etc. If you're not in for it, you probably end up with a centralized exchange. And for trends, I would love to see next year Bitcoin margined interest rate derivatives or even equity derivatives, just in the overall broader market, because that's the beauty, how you combine the crypto native world with more TradFi investment activity.
What do you think, Luuk? 2024 trends.
So for us, let's say 2020 trends, 2021 trends, doesn't really matter. So the DeFi summer, the NFT stuff, all that stuff didn't really impact us, or we didn't really engage it. For us, it's about creating liquidity in liquid tokens. Tokens being BTC and ETH for sure, but potentially altcoins. So if whatever the trend might be, AI, you name it, if these tokens become successful, become large caps, there's a need for proper liquidity in derivatives, and that's what we would focus on. So not so much in becoming a new decentralized exchange or launching the Deribit tokens or whatever. If the trend becomes tangible by means of a successful liquid token, which could be anything, we'll create derivatives on those, and that's our gateway to those tokens. What you're saying, as in terms of margin and cross collateral, I think there's again, looking at the institutional possibilities, there's room for traditional needs to be merged with the crypto space. For example, treasuries. We're looking at a yield environment. Why don't you deposit your treasury somewhere, and we'll be able to give you margin.
Well, I think we can talk about real-world assets on the next panel that we're all together, because I do believe that could be a trend. Yeah. But in any event, we've essentially reached time, but I want to go and make sure the audience understands. Today we heard from 4 different exchange CEOs and CCOs, hearing 4 completely different perspectives. But as you heard here, we have now sophisticated products at a sophisticated time. People are preparing for a potential growth in a bull market next year. And it seems like traders are the ones who have most won out in this environment. Thanks again.